Hello everybody. This is Crypto Davy podcast. We're joined today by Alexei from Build on Bitcoin. Alexei, could you introduce yourself and tell us what your project is about? Maybe a brief intro on what role do you play in the team. Take it away.
So, hey everyone, I'm Alexei. Thanks for having me. I'm the co-founder of Bob. So, my role is doing everything from product to business development to just making sure the whole thing goes in the right direction. I love to be involved in the research as much as I can and the product design, especially around the trust minimization of BitVM, Bitcoin staking, and all things around Bitcoin DeFi. We started building on Bitcoin, specifically Bob, about 1.5 to 2 years ago as an idea and as a vision to really try to unlock the best of Bitcoin, namely Bitcoin security and liquidity, and also DeFi and the network effects of Ethereum. And that's why Bob is built as a hybrid. It's a very unique type of design that we feel has the best chance of really putting Bitcoin at the center of DeFi.
Yeah, great. So basically, could you run us through how your project is unique? So basically, as I understand it, it's layer 2 catered for both EVM chains and with the security of Bitcoin. And you're also kind of working together alongside with Optimism. So could you run the listeners through how that whole thing is played out?
Absolutely. So the idea for Bob is to inherit Bitcoin security, but then always to be able to connect to other ecosystems. And before diving into like the concrete kind of design as it is today and what we're rolling out throughout the year, maybe I just want to touch on the vision and the ultimate final state of what we're building. So the idea that Bob pursues is as follows. Bitcoin is the most secure network out there without doubt, right? Nobody's challenging this, whether you're Bitcoin Maxi, Solana Maxi, we all can agree Bitcoin is secure. And at the same time, it's very simple, right? Bitcoin cannot do much. And if we want to do things on top of Bitcoin like DeFi and building more complex applications, we have to build a layer 2, right? But this also means that it's very easy for me to verify what's going on Bitcoin, right? It's very efficient. So, for example, the thing you use on your phone, right? When you have a Bitcoin wallet, it doesn't download all the Bitcoin blocks. It just downloads some metadata, the block headers, and then you can actually check cryptographically whether you've received a payment. Now, this we can run on any chain as a smart contract. So one of the kind of relevant primitives and properties that we use in Bob's hybrid design is that any smart contract capable blockchain, whether it's Ethereum, Solana, Base, Arbitrum, Polkadot, Cosmos, you name it, they can all verify Bitcoin transactions. Now, looking at Bob, what Bob does is we work on inheriting Bitcoin security. So Bob will be finalized on Bitcoin. See, when looking at Bitcoin, you'll be able to check whether Bob has finalized, or specifically whether a Bob block at position, let's say 10,000, has actually been finalized on Bitcoin. And then for the bridging, we use BitVM, which is a new design that essentially goes away from the multi-sig designs where you have, an honest majority. And if, let's say, 3 out of the 5 signers misbehave, they can steal your coins. BitVM changes this significantly in the sense that even if you have, let's say, 50 operators, and they want to together, all of them included, all 50 are malicious, and they all try to steal your Bitcoin, they will fail, and they will not be able to steal your Bitcoin as long as there is one honest online user somewhere in the network. And this could be you yourself, that triggers a fraud proof. So for those familiar with, Ethereum and L2s, BitVM is basically the mechanism that allows us to create fraud-proof designs on Bitcoin. So optimistic systems where you run something off-chain, and then if you say, okay, here is the result of the computation. So in our case, for a bridge, we'll say, all right, you're withdrawing Bitcoin from the bridge, and we've made sure that everything is correct. Your wrapped Bitcoin has been burned, and you've received the corresponding amount of BTC on Bitcoin mainnet, and then we commit to that on Bitcoin L1. And then anyone can go and challenge and say, look, actually, you guys, you didn't send it back to the user who should be receiving it, you stole it. And then the cool thing is we basically hack proofs for these fraud proofs. We actually hack stuff into Bitcoin using Bitcoin script in a way that is efficient so that you can actually execute this fraud proof on Bitcoin. So instead of always running the entire computation, you only run a very small part, and you run specifically how it works is you run a very small part of the program where I cheated. So let's say, I don't know, think of a computer program with 1,000 lines of code, and in line 999, I changed the recipient address from yours to mine. So I'm stealing your Bitcoin. That's the part of the program that you'll actually run on Bitcoin to prove that I cheated, because it's different from what I was supposed to run. So that's the Bitcoin security and the BitVM bridging side. So that gives Bob Bitcoin security, and it allows us to deposit Bitcoin into Bob in a secure manner so that you can always get it out. But we don't stop there, right? I think that the majority of Bitcoin L2 projects kind of have this as their end goal, and that's where they stop. For us, that's really when things get interesting, because Bob is also going to be connected to Ethereum using a Bitcoinsecure Bridge. And the way this works is, think of Arbitrum or Optimism, right? They use fraud proofs to connect to Ethereum. So when you deposit your ETH into, let's say, Optimism, and then you want to withdraw, once fraud proofs are activated, or actually already now, you have to wait for 7 days, and then you can get your ETH back, right? And that the 7 days is a period that anybody can make a fraud proof in case the Optimism sequencer tried to steal money. Now, what we do is we use the same design to connect Ethereum to Bob, with one small difference. We don't use Ethereum fraud proofs for that bridge. Instead, we tell the Ethereum layer 1 contract to go look at Bitcoin, right? We say, look, here is a proof that Bob, the state of Bob, has been finalized on Bitcoin in this specific Bitcoin block. So you know that after sufficient Bitcoin block confirmations, Bob has been finalized, Bob is secure, so you can trust the deposits and withdrawals from and into Bob because they're secured by Bitcoin. And so for an Ethereum user, what they will be trusting is, oh, okay, Bitcoin is safe. Bob is finalized on Bitcoin. I can now deposit my ETH and I can then later withdraw it. So it's very similar to how fraud-proof and rollups, optimistic rollups work on Ethereum, with a subtle difference that for the bridge that connects Bob and Ethereum, we tell Ethereum to look at Bitcoin. And because Ethereum and all the other smart contract chains can easily verify Bitcoin transactions, this design can scale to any smart contract capable chain. So Ethereum, Solana, Base, Optimism, ultimately Bob can connect to any chain that has smart contracts and allow the users to deposit their assets, trade up on Bob, and withdraw them back to any of the connected layer 1s secured by Bitcoin. And of course, this also means that you as a Bitcoin holder, when you deposit your Bitcoin into Bob using BitVM, you can then decide, okay, do I want to stay on Bob? Or if you want to look for more opportunities, and you're okay with the risk of trusting Ethereum or trusting Solana, which, arguably, these are very secure systems, then you can open vaults and deposit your assets directly into DeFi opportunities on Ethereum, on Solana, from within Bob. And these bridges, right, the way that you deposit from Bob to Ethereum, that's secured by Bitcoin as well. So we're really trying to maximize the safety of your assets as a Bitcoin holder. And the interesting part here is that we use this very simple trick, I guess. It's not really a trick, but it's the fact that trust is perceived. Bitcoiners trust Bitcoin. Everybody else also trusts Bitcoin. And Bitcoin is so simple to verify, and that allows us to create this system that allows you to use Bitcoin on Bob, but also multi-chain, without having to introduce a completely new Bitcoin, like a completely new bridge network, because there's so many of these interoperability networks that have a lot of use, right? If you're not trying to bridge Bitcoin, they're very useful to go between different chains, but they always introduce a new blockchain, right? It's always a new system that you have to trust. And our approach is, well, we just trust Bitcoin, right? Bitcoin's already there. We can use that. Why introduce another kind of chain? And yes, Bob is a network, but Bob's security is anchored in Bitcoin. So we're really trying to minimize additional trust assumptions. Now, this is what Bob looks to become in the future. But realistically, the technology is not yet there, right? We have to always be very open about what's there and what is not there yet. what we have now is we have Bitcoin staking is on testnet, it's going to mainnet, right? And that is one of the components that we're using for Bob finality. So that's point one. And then BitVM is also on test with prototypes and will be released to public testnets, then audits, and later mainnet throughout this year. And once that is completed, then we can finally kind of enter this state where we have Bitcoin security across all of these kind of interactions. So that's why Bob is rolling out in 3 phases. In phase 1, we focused on bootstrapping, on starting to build the necessary tools and infrastructure, and starting to build easy ways for users to deploy their Bitcoin into DeFi. And on one hand, we had essentially two pillars of our focus. One was BitVM and Bitcoin staking and Bitcoin security research, and that is essentially rolling out in 2025. But on the other hand, we focused on things like one-click staking. So no matter which bridge you're using today, there's so many, you don't have to, click around and like do 50 interactions to get to your Bitcoin DeFi position. You can do this within one Bitcoin transaction. So we've really been focusing on simplifying the interface, making it more accessible, and also doing this not only to allow users to use the existing centralized or semi-centralized wrapped Bitcoin solutions today in the more acceptable and user-friendly manner, but also preparing for the arrival of BitVM, which again will be secure but not super user-friendly. But with the tools we already have on Bob, we can hide the complexity from users without them having to always trust centralized providers. So we're kind of creating usable decentralization. And then in phase 2, what that is essentially rolling out through 2025, and we'll see testnets launch very soon, depending on when this podcast airs. What we're doing in phase 2 is we're adding Bitcoin security to the Bob rollup. So Bob is currently settling on Ethereum, and what's going to happen in this upgrade is, first of all, ZK proofs. So Bob will be a ZK rollup. And for Ethereum users, they will be trusting that the ZK proofs have been submitted to Ethereum. So as Ethereum users, you still trust Ethereum in this phase. And then on the Bitcoin side, we add Bitcoin staking. So when the sequencer produces blocks and generates the proofs, they also give these proofs and the blocks to Bitcoin stakers. And then the Bitcoin stakers verify and they sign off. And as long as 2/3 of the stake BTC has signed off, and again, on Babylon right now, Babylon's our partner here, they have over $5 billion worth of BTC staked. As long as 2/3 has signed off, we can proceed. And then this information, so when we send the proofs to Ethereum, we also attach the signatures and the proof that, yes, the majority of BTC stake has also signed off on this. And that gives us a very interesting setup of arguably dual security, of hybrid security, where we have Ethereum security for ETH assets, but then we're using Bitcoin staking, we can launch the BitVM bridge, because the BitVM bridge then, instead of trusting, Ethereum fraud proofs or something, it looks at the Bitcoin stakers and says, okay, if the Bitcoin stake has signed off on the Bob blockchain, and on my bridge in deposit, the bridge in transaction or bridge out transaction for the Bitcoin side, then we're safe. So we achieve this very strong security system where you have Bitcoin security and Ethereum security, and it will be the most secure, arguably layer 2 in the markets, arguably more secure than a lot of layer 1s, because we're combining and inheriting security from both Bitcoin and Ethereum. And then I think, we can start optimizing, because in that state, we're not 100% Bitcoin secured yet. It's like a mix, but arguably it is more secure than anything else. And the final stage, phase 3, would be really then transitioning to being a full Bitcoin rollup. And what this means ultimately is that instead of submitting the fraud proofs, the ZK proofs in that case on Ethereum for full execution, we would turn that off and instead replace it with fraud proofs on Bitcoin using BitVM. So in phase 2, we use BitVM only for the bridge, and then a mix of ZK proofs on Ethereum plus Bitcoin staking for security. And then phase 3, we would use BitVM specifically with fraud proofs for security and the bridge as well. And then keep the connection to Ethereum, because Ethereum, again, would, as described earlier, would be looking at the Bitcoin finality on the Bitcoin blockchain. So not just at the stakers, but also at the fraud proofs that should not happen on Bitcoin. Now this phase 3 adds more Bitcoin security. The difference between Bitcoin staking and fraud-proof based designs is, in fraud-proof based designs, every node pays attention, right? Like if there's a fraud-proof, every node will know that something went wrong and can enforce safety. In Bitcoin staking, you have a subset of the nodes. So any node that is staking Bitcoin is participating in the security protocol. So it's very safe, but it's not the same level. Like it's close. I think a good comparison is EigenLayer and Ethereum, right? It's like EigenLayer arguably is very secure, right? There's billions of dollars of ETH staked. It's a very secure system, but ETH is still more secure. And the same is here again with Babel and staking and Bitcoin. It's kind of like you would upgrade to full Bitcoin safety once you're big enough, because it costs much, much more. You have to be able to afford it. You have to have enough users to spread the costs that are caused by posting a lot of data to Bitcoin. And that is why it is for us in phase 3, because we have a pragmatic approach. Bitcoin staking is going to be very, very secure and more than enough security for Bitcoin DeFi. And only when Bitcoin DeFi starts outgrowing the BTC staked, then it becomes necessary to really upgrade to full Bitcoin security with a rollup. But it's also then where it makes sense, because we have so much value locked that we can easily spread the costs among users and people will not notice the additional costs. So that's essentially, and I'm going to stop my monologue here. That's kind of our kind of long-term roadmap. So phase 1, which is right now, we focus on UX and we spend a lot of resources on R&D and development. And we're essentially now in 2025 entering phase 2. So essentially, we launched mainnet of phase 1 in May. Now we're releasing phase 2 on testnet over the next weeks and months. We'll be starting rolling out with public testnet. And then after audits, there'll be a mainnet with initially training wheels and then fully transitioning into this hybrid security setup with Ethereum and Bitcoin. And then finally, and this final phase 3 kind of upgrade is really dependent on, does Bitcoin add a soft fork, or do we stay as we are on Bitcoin? And how much demand is there for additional security? And really becomes relevant if we hit billions and billions of dollars of deposits, which of course we hope to do. But realistically, it's not going to happen within months of launch, right? This is going to take some time, especially to just build more and more trust in BitVM as a system as well for the bridge.
Yeah, I guess the key takeaway here is that your end goal is to build the most secure network possible for the end users using Bitcoin. And then on top of that, because of course, Bitcoin has a very large TVL compared to all other coins, and there's a lot of money which just basically sits in Bitcoin, and you can do almost nothing with it other than maybe hold or sell or what's so not. And the big thing here is that, of course, you're bringing DeFi into the whole space. Could you bring the listeners up to speed on what is your bull case for the Bitcoin DeFi as a sector, basically, and how does Bob play a role in it, other than being this innovative, secure network which you plan to launch DeFi on? How do you actually plan to grow the DeFi ecosystem? Because there's, a lot of chains and a lot of competition right now. And to set yourself apart from them, you have to do something in a unique form. So what is your competitive advantage in that case?
I think there's 3 things, right? And they're like short, mid, and long term. Short term, it's really about good UX. So Bob has the only existing one-click Bitcoin staking solution. It's called Bob Stake and allows you to go from Bitcoin on the L1 into dozens of different Bitcoin DeFi strategies in one transaction. So instead of on the other chains where you have to go decide which wrap Bitcoin you use, you have to, maybe go through KYC, or there's a minimum deposit. You have to figure out how you actually get your Bitcoin in. And only then you can start looking at DeFi protocols and so on. On Bob, it's one click, right? No matter which strategy you want to pick from, it's one Bitcoin transaction, and it's super streamlined. It's super simple. And you can actually try it out at gobob.xyz/stake. But of course, please do your own research. There's always risks involved in using Bitcoin and DeFi, and you just have to be aware of what you're doing. Now, the second advantage I think that we have is that, as already mentioned, Bob is a Bitcoin secured network. We're working with Babylon, and we're currently the largest contender, or essentially largest ecosystem in that growing Bitcoin secure network ecosystem. So why is this interesting? We've seen what happened on Ethereum with staking and liquid staking specifically, where a lot of liquid staking assets on Ethereum essentially boosted Ethereum's DeFi ecosystem, because you could suddenly stake Ethereum, secure the network, at the same time use it in DeFi, which unlocked billions of dollars worth of liquidity, right? Now, what's happening on Bitcoin is the same thing. You can stake your Bitcoin now to secure things like Bob and other ecosystems, but you can also have a liquid staking token representing that position. So it's your Bitcoin that is appreciating, that is basically earning staking rewards, and you can use it in DeFi as collateral for trading. You can sell part of it. You can use it to leverage up, do whatever you like. And this creates a very interesting but very, very powerful flywheel effect. Think of it this way, right? If you look at Avid today or on Binance, how much, if you want to earn in your Bitcoin, how much do you get? 10 basis points, maybe?
Yeah.
Not even a few percent, like 0.1 something, right? It's 0.04 to 0.15, something in that range. It always changes, but realistically, it's quite low. So the risk-free return rate, even on Bitcoin, is almost zero, because, well, you always have to take a risk. Like, Bitcoin has no emissions in that sense, unless you're a Bitcoin miner, but then you have a lot of operational risk of mining hardware. So we're looking at very low threshold for people to be like, okay, it's if I want yield, there's not much to be had right now. So with staking, when you stake and you secure Bob, you tokenize it, you get an LST, you can deploy it into Bob DeFi. You can lend against, you can borrow, you can trade, you can go trade it on Perpdex. You can do so many more things. You can borrow and buy RWA assets. So what you're doing is building liquidity, and this allows more and more people to trade it, because the more liquidity, the more efficient it becomes. And that helps us build the deepest liquidity for Bitcoin and Bitcoin-based assets in the entire crypto space. And then from there, what we see and what we will have is fees. The more transactions, the more volume, the more fees are generated. And these fees, a part of them is actually routed back to the stakers of Bitcoin, the ones that actually are securing the system. And the ones are actually then tokenizing their staking positions and contributing to generating these fees. And what you then get is there's fees, there's staking rewards to be earned. So there'll be more Bitcoin staked. And then more Bitcoin LSTs created, more liquidity contributed, more volumes, more fees, which again means more staking rewards. Means more people will stake again, more people put into DeFi, and you essentially start cycling in liquidity. And this is what EigenLayer tried to achieve on Ethereum, and they did to some extent quite successfully, with one subtle difference. In Bitcoin, right, you have this unique positioning where there is not much there yet. On EigenLayer launched into a very crowded ecosystem of rollups and L2 stacks, Arbitrum, Optimism, zk-Sync, Polygon. People had a lot of choice, and arguably, why would you use EigenLayers? If you could be a full Bitcoin Ethereum rollup, why would you use something else? Why do you need restaking? While on Bitcoin, again, as I said, BitVM rollups, these things don't yet fully exist. It's going to be very, very hard to run them, very expensive. The majority of chains today that are Bitcoin tools have nothing to do with actual Bitcoin security yet. So with Bitcoin staking, you have a unique opportunity where the majority, and I can already tell you that the majority of Bitcoin L2s will never upgrade to BitVM rollups, because they won't be able to afford the costs, or it will be too technically complex. So Bitcoin staking offers a very good stepping stone here. And that means a lot of demand for Bitcoin staked, a lot of opportunities to put that to work. And again, Bob right now is the largest and the best position to essentially capture this market. And I think that's a very unique opportunity. And that you can already see if you look at Bob's TVL chart. You can see that there's a very big jump around November, and that comes shortly after we launched our Bitcoin staking product and started integrating Bitcoin LSTs. And the majority of Bob's TVL today actually comes from Bitcoin-based assets and liquid staking tokens, and it's growing daily. And then the last one, if I can remember what it was, yes. And the last advantage, of course, here is security, right? Why? So if you look at the ratio between Bitcoin and DeFi and its market cap, the market cap of Bitcoin and DeFi, it's only 0.1 to 0.3%. That's not a lot. I mean, yes, dollar-wise, it's a lot because Bitcoin has a $2 trillion market cap. So yes, that's a lot of dollars that are in DeFi. But if you compare it to Ethereum's percentage, Ethereum's ratio from TVL to market cap is 30%. That's 100x. So we have this 100x growth potential. But why has it not happened yet? Well, because we didn't have the tools. People didn't have secure ways to deploy Bitcoin into DeFi. And that is exactly what staking and BitVM finally unlocks. So you're giving Bitcoin holders who want to be on the safe side, who want security, we're finally giving them a way to use Bitcoin in DeFi properly, in real DeFi, right? And I can kind of understand a lot of Bitcoin holders where, they're criticized for, not using DeFi and going to Binance. And then the reply is, well, okay, I can go to Binance, but if I use wrap Bitcoin in DeFi, it's like I'm just giving it to BitGo. So, where's the difference? And that makes sense. It's fair, right? I mean, these wrap Bitcoin solutions today are centralized, maybe a bit better than exchanges, maybe not, transparency wise. But I can see why people were hesitant. And that's the biggest advantage of Bob, especially if you compare us to like Ethel2s. And we are arguably competing mainly. Like a lot of our conversations with builders is, oh, do I go to Base? Do I go to Bob? What's the difference? Well, Ethel2s will never have a secure Bitcoin bridge. It's not BitVM, and the secure Bitcoin bridging solutions are not designed to work with other ecosystems. They don't work well with Ethereum's proof of stake or Cardano, or Polkadot, or other networks. It's just not designed for that. What it does work well with is Bitcoinsecure networks, because the only thing to check when we're verifying, something happened on the Bitcoinsecure network, whether everything is fine, we only need to look at Bitcoin. And that is arguably easy. And BitVM works within the Bitcoin ecosystem, within the Bitcoin tech stacks. It just makes it easier for us to verify these things. And that is another reason why Bitcoin layer 2s will dominate Bitcoin liquidity. And I've mentioned 3, right? Easy access, the liquid staking flywheel from Bitcoin staking and LSTs, and last but not least, security and secure access to assets. And I think these 3 things in that order will be the catalysts of essentially Bitcoin L2s very quickly outgrowing ETH L2s and then potentially even challenging Ethereum itself.
Yeah, so speaking of DeFi and other L2s, many of them have grant programs which they allocate tokens, and they kind of try to bootstrap and do this whole same thing as you were saying with the flywheel of the more liquidity they pour in their own tokens, the more TVL they get, the more TVL, the more volume, and etc. You also received a grant of 750,000 Optimism tokens. And could you run us through how you're planning to utilize this to bootstrap the ecosystem, or how the grant will basically be allocated?
Absolutely. So we're very fortunate to be part of the OP superchain ecosystem. We're not just a superchain and the third largest or in size after Base and Optimism, but we're also now a delegator, one of the top 100 delegators, and participating actively in governance, because we believe in essentially this hybrid design and combining the best of both Bitcoin and Ethereum. And we believe superchain and OP stack are the best way forward here. We worked and have the chance to work with the best teams in that space, and it just allows us to not always reinvent the wheel and compete on all fronts, but rather have this collaborative approach, because a lot of the Ethereum builders, and specifically in the superchain ecosystem, they love Bitcoin. They want to get access to more Bitcoin. For them, Bitcoin is this completely new user base with hundreds of millions. I mean, it's 300 million plus Bitcoin holders that are not yet in DeFi. And that's why we work closely with that ecosystem. And the OP grant is to do specifically that: onboard more Bitcoin users into DeFi, grow the Bitcoin DeFi ecosystem, so that not only Bob and users on Bob, but also because being part of the superchain is very easy to access from other superchain networks. The goal is to grow this Bitcoin ecosystem and become the main place for Bitcoin-based products and just access to BTC for not just Bob users and Bitcoin holders, but also Ethereum and superchain users. And so the grants serve to onboard users, to motivate them to participate in experiments and essentially go and learn about DeFi, start using their Bitcoin in DeFi. Of course, learn about the risks. But again, these grants serve to incentivize people to spend time on these things. And yeah, I mean, they're launching very soon. We're working closely with teams that have deployed to Bob, and many more projects are actually in the final stages of their deployment and launches ahead of this essential first wave of grant distributions. And we'll be very interested to see how these things proceed and monitoring the impact. And yeah, we're very excited to be able to share that opportunity with Bitcoin builders and essentially also ETH-based teams that want to build within the Bitcoin ecosystem and essentially benefiting from the support of strong partners here.
So, having laid the groundwork here and knowing that there will be a grant distributed and you will become a very secure chain aimed for everything Bitcoin DeFi, how can users actually get involved right now? Could you run us through what are the main points, how people can interact with Bob today to get incentives or to farm DeFi yields and etc.?
So I mean, again, with yield and incentives, it's always very important to understand the risks and do your own research. You can check out the Bob DeFi ecosystem and you can participate in different activities. I highly recommend also checking out our ecosystem page. And we have, I mean, again, I'm not 100% sure when this is airing, but I think by the time this will go live, there's going to be a bunch of new protocols that come out of stealth in their deployments. So my suggestion is go to gobob.xyz, take a look at our ecosystem, go at DeFi, look at DeFi Llama, where you already see networks that have integrated, where you can see how much TVL they have, how much trust they've been able to build. And then also check out the Bob stake page, which just makes it easier for you to access these different applications.
Yeah, great. So for all the listeners out there, you're free to try it out. It's a very exciting ecosystem. As you can see, we've been contributing to the development of Bob ourselves. We find it also quite interesting what you're building. And I mean, it's always great to find new opportunities in DeFi, and especially when it's Bitcoin based, because as you said, Bitcoin yields are usually pretty small, provided you do have plans to launch grants and new projects coming in, which usually also incentivize liquidity provision with their own tokens. I mean, this could be a very good match for looking for yield here now on your Bitcoin without risking too much to lose it, basically, in some complex strategies that you have to use now to find good yield above the tens of percents, maybe. You have to really go full speed into looping and etc. So yeah, it's a very interesting ecosystem. We'll be diving more into it. Thank you very much for your time. It's been a pleasure to hear about the technology that you're planning to bring to the Bitcoin space, and thank you for the podcast.
Cool. Amazing. Thanks for having me. Bye-bye.